Take a look at this chart. It shows us whether investors are buying or selling Ethereum. Green signals capital inflow, whereas red means capital outflow. And this spike, right here, is telling us that investors have locked in $420 million of profits on Ethereum. This is the second largest outflow in the past 5 years. We've seen such sharp profit taking spikes only 4 times since 2020. Now, if we put the price of Ethereum on top, a clear pattern begins to emerge. Each of these spikes has occurred near local tops, right before Ethereum dropped by at least 40%. And back in November of 2021, it even marked the peak of the entire bull market. That's why these holders are often referred to as smart money, because time and time again, they've exited before major drawdowns. But on the other side of the equation, institutional capital has been pouring into Ethereum exchange-traded products at a record pace. In just the month of July, over $5.4 billion worth of Ethereum has been accumulated. That's more than the total inflows from the previous 12 months combined. So, on one hand, on-chain data is signaling that smart money has been taking profits aggressively. But on the other hand, institutions have been buying Ethereum through ETF-like vehicles in an unprecedented manner. One of these groups is going to be proven terribly wrong, and we're going to show you who it is in this video. One of the biggest fundamental forces behind Ethereum's demand right now comes from the rapid growth of stablecoins. Since 2024, the total stablecoin market has doubled from $130 billion to $260 billion. And this trend is likely to accelerate further because of the recently passed Genius Acts, which lays out a clear regulatory framework for stablecoins. According to U.S. Treasury Secretary Scott Bessent, the stablecoin market cap is on track to hit $3.7 trillion by 2030. An increase of nearly 1,500% from where we are today. This is pivotal for Ethereum because it currently hosts 54% of all the stablecoins in circulation, and 45% of all stablecoin transactions are processed through the Ethereum network. In other words, more than half of all stablecoins are built on Ethereum, and nearly half of all stablecoin activity happens on its blockchain. This puts Ethereum at the forefront of one of the fastest growing segments in digital finance, creating a fundamental catalyst that could drive a significant increase in demand for the token itself. More usage means more Ethereum transaction fees burned, which reduces supply and creates upward pressure on price. But the use case doesn't stop at stablecoins. Another major growth driver for Ethereum is the rise of real-world assets, or RWA for short. Put simply, RWA are physical or traditional financial assets, like real estate, stocks, or bonds that are brought onto the blockchain in a tokenized form. This makes them easier to trade, settle faster, and opens them up to a global investor base. Today, even the largest institutions are moving in on this narrative. BlackRock, for example, has already begun experimenting with tokenizing assets on blockchain infrastructure through their BUIDL fund. And when it comes to these institutional-grade RWA projects, Ethereum has consistently been the preferred network. This category has also seen explosive growth recently. In just the last 3 years, the total supply of tokenized real-world assets has jumped tenfold, from $860 million to $8.6 billion. And Ethereum dominates this space as well. Since 2024, the value of RWA on Ethereum has gone up by 4 times. Today, around $7.7 billion of on-chain treasuries, credit, and funds are hosted on the Ethereum network. That's more than 90% of the entire RWA supply. With this level of dominance, Ethereum has become the go-to infrastructure for RWA building. And as more institutions and companies adopt this model, it could add yet another major tailwind for the network. When you combine this with the surge in stablecoin adoption, you have 2 powerful forces that could position Ethereum to become one of the best performing assets. Ethereum has already surged by more than 200% since its April 2025 lows, delivering massive gains for anyone positioned early. We've been calling for such a rally since March end, and it's played out exactly as we anticipated. After such a strong move, a pullback is natural, as no asset goes up in just a straight line up, which is why we recently locked in a 21% profit on our Ethereum position at $4,640. But unlike Bitcoin, Ethereum hasn't set a new all-time high in this crypto bull run. And at the same time, the pace of institutional adoption appears to be only just starting to accelerate. The share of Ethereum's total supply held by institutions has risen from under 3% in April 2025 to almost 5% today. And we think this trend is likely to accelerate further as the stablecoin market and the real-world asset sector continue to expand, creating a fundamental driving force for the Ethereum token. That's why we have been positioned at Bravo's research to take advantage of this, and it seems like a lot of other big players are starting to do the same after realizing the implications of these recent developments. We can see that through this chart, tracking the total Ethereum holdings by public companies, also known as Ethereum treasury companies. These are businesses that hold Ethereum on their balance sheets as part of their corporate reserves, much like some companies hold Bitcoin as a treasury asset. The combined holdings by these companies has jumped from 40,000 tokens in April 2025 to more than 860,000 tokens today. That's over 0.7% of Ethereum's total supply accumulated in just 4 months, which roughly equates to $4 billion worth of buying. And existing Ethereum treasury companies are still continuing to add to their balance today, with new companies stepping in to join this accumulation trend. That's why we're not really concerned about this big profit-taking spike on Ethereum that we highlighted earlier in this video, because we have heightened demand from institutions and Ethereum treasury companies based on two core fundamental developments for Ethereum: the growth of stablecoins and the rise of real-world assets. In fact, if we take a closer look at this chart, we can see that profit-taking often unfolds during sharp run-ups in Ethereum's price, and this process can stretch over weeks or even months, with selling pressure typically increasing as prices continue to climb. If Ethereum extends its rally from here after its ongoing pullback, fueled by these same fundamental catalysts, then we could see this profit-taking chart morph into something like this. And we think that's a likely scenario today, which is why, even in the face of large-scale profit realization, we don't see this as a definitive bearish signal. We have been bullish on Ethereum since March 2025, when we anticipated a short squeeze on it, and price was still around $1,700. In the past year, we've already had multiple successful trades on Ethereum, with gains like 28%, 37%, and even 83%. And the ones that did not work out were all closed for less than a 5% loss. You can see all of our closed trades on our homepage for free. To follow our exact trading strategy step by step, with real-time buy alerts, sell signals, and portfolio updates, join our community using the link below.